Hello, everyone. We're here with Toronto-based divorce lawyer Timothy Kinnaird, and today he's going to be providing us with some general information about divorce as it relates to the family home and the splitting up of family property and assets after separation. So, Timothy, can you say a little bit about the splitting up of property and assets when a marriage is over and one is looking at a divorce?
Well, Didi, as I stated before in our introductory video, the law and the courts tend to look upon marriage as a form of business partnership. When it's over, the net profits, as in a partnership, are shared equally. So, for every dollar the property of both parties has gained in value during the course of the marriage, no matter whose name it's in, the parties each will generally share it equally. For example, if your spouse's stock portfolio has gained $1,000 from the date of marriage to the date of separation, you keep $500. And the same applies to any RRSPs, pensions, vehicles purchased, furniture bought, jewelry, and pretty well anything else of monetary value gained by the spouses during the marriage. The only exceptions are inheritances and gifts that were made to a spouse during marriage. They do not have to be shared.
So, if my spouse is worth $1 million on the date of separation, am I entitled to $500,000 then?
Let me clarify. It's the value gained, not the total value. So you need to deduct the value of any property each brought into the marriage beforehand in order to figure out what you're going to be sharing equally. So if your spouse was worth, let's say, $500,000 on the date of marriage and is worth $1 million on the date of separation, you only get to share that $500,000 increase in value. Now, the only exception to this, in terms of sharing, is the family home, because it's considered unique and special when it comes to divorce.
Okay, so how exactly is the family home special as compared to the other?
Well, there are two ways that the family home is special under the law. The first is that after separation, both parties have an equal right to live in the home. Though this may be difficult and somewhat awkward after they've decided to separate, many couples simply cannot afford to maintain two residences, especially if they have children. So until there is an agreement, settlement, or an order for one party to have exclusive possession of the home, both can stay at the home, even though legally they are separated. So there can be no changing of locks or stopping the other from entering the home at any time. So if both must reside together, though being legally separate and apart, each should try to at least be on their best behavior. Because if there is any misconduct or, for example, violence, he or she may be subject to a court order forcing them out of the home. Now, a second way that the family home is special under the law is because, unlike other property, the actual net value of the home as of the date of separation is shared, no matter who paid for its purchase, the mortgage, the maintenance, taxes, or insurance during the course of the marriage.
So, how is the sharing of the family home different from the sharing of other family property, Timothy?
With the family home, you share with your spouse its total value, not just the increase in its value from the date of marriage. If it were any other type of property, you would just share in its increase in value during the marriage.
Okay. So, how would I estimate what my fair share of our family property will be as of the date of separation?
For fixing values, you need two dates: date of marriage and the date of separation. And if you know approximately how much everything was worth on those two dates, you can guess roughly what will be shared by doing the following. First, total the net value of all property owned by both parties when they were married, excluding the family home, of course. Subtract that from the total value of all property owned by both parties on the date of separation. Next, add in the net value of the family home, no matter who paid for it, and split that total into two, and that's your share that you'll be taking with you upon leaving the marriage. But just make sure that you exclude any gifts or inheritances that were acquired during marriage, because, again, those aren't shared.
Okay, thank you, Timothy. Can I get a divorce before coming to an agreement about the property?
Yes, but remember that you only have a maximum of 2 years after a divorce is granted or 6 years after separation to apply to the court for your share of the family property. I'd like to note, though, Dee Dee, that there are some exceptions to these general rules about sharing that we can't get into right now. And sometimes figuring out Who owns what and when and how much can be very, very complicated, especially if someone else is determined to hide their assets. If there is a lot of money at stake and things are complicated, I'd urge our viewers to contact me.
Okay. So can you give us some examples of what are considered family assets and what else that would include?
Well, the second most substantial asset of a marriage, especially a long-term one, are usually the pensions of the parties, and after that, uh, perhaps the RRSPs of the parties, stocks and bonds, furniture, money in the bank, motor vehicles, sporting goods, and the like, which are all shared by both parties.
How do parties share their pensions earned during the marriage?
Well, in some provinces, the pension plan itself is required by law to value the total pension benefits earned during a marriage, which are then usually shared by the parties. When a divorced party begins to receive a pension on retirement, the other will also receive a pension benefit amount based on his or her half share of the pension earned during the marriage. Again, I urge parties with complicated property or pensions issues between them to contact me to go over the numbers to make sure each is getting their fair share.
Okay. And I'm sure, Tim, that you've probably seen some really bitter disputes about dividing up property and assets. I know I have. So, in your experience, what is the best way for a couple to settle property and asset issues in an amicable way?
If the parties plan to stay reasonable and unemotional, they can sit down with a list of all the household contents, the bank and other account statements, and major assets, and address and try and settle each of their values. Do this if you want to save money and avoid the added expense of valuation experts and accountants. And if you find that it's difficult to sit down with your separated spouse and agree on the numbers, then find a mutually agreeable but qualified third party who can help you value the assets in an unbiased way, and at the same time keep the both of you focused on the task at hand without letting your emotions get in the way. Well, I recommend that you try to do it this way first, because unfortunately, and to my dismay, I've seen the simple issue of adding up the property and assets being used as a way of one spouse punishing the other. In their irrational emotional state and what I see actually as bitterness, they do this by dragging the other into court and battling out what essentially should be a simple accounting matter. Sometimes this can end up costing more than the value of the assets in dispute. So if disagreements should arise about the value of a spouse's private company or even absurd things like a wine collection, this can, in my experience anyway, require very expensive and time-consuming expert reports that would again far exceed the value of what is being argued over. Yes, believe it or not, I've seen arguments about the value of golf clubs, a shoe collection, or even the family dog cause the biggest fights.
Okay. So you said earlier on that these issues can be left for another day because they have 2 years after a divorce judgment or 6 years after separation be settled. Should spouses try to get these things settled as soon as possible after the divorce, Timothy?
Well, getting a divorce out of the way makes things far less emotional and less complicated for all concerned. By getting that divorce first, the parties can address these financial issues without the emotional baggage of still being married to each other. But at the same time, the issue should not be put off for long after getting the divorce. Waiting too long has its risks. You find that anything can happen. Assets can disappear. Property values fall. Some people become disabled, unemployed, ill, and the sooner you get that final equalization check from your former spouse, the sooner you can stop worrying about these matters and get on with your new life. So again, if your viewers want to get this final aspect of a failed marriage settled, contact our office and retain me to assist in drafting up a final separation agreement, which would just simply confirm the terms of any property settlement the parties have finally agreed to. So I invite our viewers to watch our video on separation agreements for a brief introduction to this process.
Thank you, Timothy, for being with us here today.
You're welcome.